We understand that ValueQuest invests across sectors, across market cap, but is there a negative list, sectors or subsectors that you avoid, or certain company managements that you avoid? Also, could you talk about red flags that pop up which make you basically drop coverage on certain stocks?
So Warren Buffett has explained it very nicely when he says you should stick to your circle of competence. But most people interpret it in a wrong way, that you should not invest at all, or you cannot expand your circle of competence. Even he never invested in technology companies, but then eventually he did. So that tells you that you can expand your circle of competence. But that is a more positive way of looking at it. The more negative way of looking at it is basically making sure that you don't venture in gullies where you can end up losing your capital. So do not bet on managements that have taken actions in the past which were detrimental to the minority shareholders. Do not bet on a huge debt on the balance sheet. Anything more than 2-3x debt to equity, one has to be very, very careful on betting it. There has to be a very clear path to deleveraging of that balance sheet, then only you should even consider it. So, and there are obviously the basic quality of the business has to be there. So I would say besides that, there are many red flags that one should avoid. We have a very good management evaluation framework where we try to assess the management on three things. One is the integrity of the management above par, above board. So over there what we try to see is whether the cash flow accounting matches the P&L accounting, and if that does, then we hold that. And also the proof of the numbers is usually lies in the cash flow, the dividend, the tax payment, and where the money is going. That will tell you a lot about the integrity of the management. Second is try and see whether your interests are aligned with the management. How do you do that? There has to be skin in the game. There should not be other businesses. There should not be other smaller companies where the management is focused. So if your interests are aligned with the management and the promoter group, then you are in good space. And then the third is obviously the capital allocation, which is the big one. How have they utilized the cash that they have generated in the past? That will tell you where that money, whether they are going to share it with the minority shareholders, or if there are opportunities for reinvestment within the business, that is where you are going to make your returns from. If the management meets all the three criteria, that is where you should be betting on. So besides that, there are some industries against which we have some biases. We don't try to time the cyclicals, because you have to be very sure of your entry point as well as the exit point, and you cannot get that cycle wrong. Having said that, we will not say that we will never invest. You have to buy cyclical companies at asset value and sell them when they are getting valued for their earnings. But we have our biases against those. We will not venture down that road very easily.
ValueQuest's negative list is more to do with the PM avoiding companies whose management has had a track record of taking actions that are detrimental to minority shareholders, or be wary of companies where the debt to equity is 2:1 or 3:1, and where there is no clear path of deleveraging the balance sheet. More so, they also look at management from three angles. First being whether the management is dedicated to the business that they are into, or do they focus on more than one companies and more than one businesses. Second is how have they allocated capital, the cash that they've generated in the past. So second is capital allocation, and third is integrity in reporting numbers, so which is typically tested by cash flow accounting.